Okay, welcome back. 24 points lower, 17,991. One big swing from the high point of the day from 18,140 and, holding that around that 18,000 level so far. So that's what things are looking like. Market breadth is still positive, almost full 3:1 in favor of advances. So broader markets are stable as well. PNB Housing is the next company that we're speaking with. Now, since Q2 of FY20, the company's assets under management have fallen by more than 23,700 crores. Their loan book in second quarter of FY23 recorded the best growth in 14 quarters, up 2.7% quarter on quarter. Of course, I mean, they've got a new man at the top as well. Girish Kousgi, Managing Director and CEO at the company, now joins us. Mr. Kousgi, great to have you back on the program. Thank you very much for your time. How are efforts to kind of accelerate growth at PNB Housing going? Because this is a time where interest rates, of course, have moved up quite a bit. There is, of course, twofold impact, right? There is impact for consumers, sentiment-wise, and second for players like you who are not banks. So just tell us, I mean, what's happening at PNB since the last time we spoke?
Good morning, Prashant. I think if you look at the industry after COVID from 2020 October, I think market is doing very well. It came back quite strongly, and that is continuing. To say that the entire housing finance industry is in sweet spot, and same thing is true for every single company, including PNB Housing, going forward. Now, after the last our engagement after quarter two results, I had mentioned that plan for PNB Housing in terms of growth and also in terms of margins. I think the story is pretty strong. We're going to focus largely on retail, and all the companies have to do now is to just ensure that they focus on basics, try to capture the opportunity what is there available in the market, and I'm sure every company will do well. This will ensure that there would be growth in disbursements. I had mentioned that starting from next year onwards, the growth in disbursement is going to be in the range of 22 to 25%, and the book growth would be about 17 to 18%. In terms of margins, I had mentioned after quarter two results that a spread of 2.2 and a NIM of 3.2, at least for next few quarters. So I think the story is quite strong. Demand is back. Economic activity is completely, up and running in the country. In terms of interest rate hike, I think, you spoke about that. If you look at the rates probably 4 years back, I think rates are much higher than what it is today. I think once COVID started, rates started coming down and it saw the bottom and the rates went as low as 6.75 in terms of offering, and then rates started, moving up. So whenever the rate goes up, I think for some time there'll be a little bit of impact, but that is short term. After that, I think market will adjust, customers will adjust, and then it will come back to normalcy. And I'm sure this will also, going forward, will enable growth.
Okay. You've also started an affordable housing segment called Roshni, and last time we spoke with you, you had indicated that 25% of your business will come from the affordable housing segment. Can you tell us how it's doing so far and what kind of growth are you hoping to see?
In fact, last time also I mentioned we've just started. I think it will kickstart in quarter 4 of this year. Okay. And I think going forward, incrementally, contribution from affordable or Roshni is going to contribute about 25%.
Okay.
Right.
So, all right, got that. So can you tell us a little bit, I mean, what is the, say, incremental cost of funds versus what the cost of funds were earlier? I mean, what are you looking at for a target by the end of FY23?
I think I'll not be able to share specific details because of we have filed DLOF. So I think generally if you talk about the industry, I think rates had, I think it's almost peaked. And we could see that with the last repo increase as well. I think earlier the increase used to be about 0.5. I think this time it was less than 0.5. I think it is almost peaked. Maybe we might see one more increase, maybe 0.25 to 0.3. I think all the companies have aligned to that, and most of the companies have passed on the rate increase to the customers because the general trend is that the rates were increasing, and therefore typically most of the companies would not get impacted by rate highs because they would be able to maintain margins since they have passed on to the customers.
It's interesting that you've started, the affordable loan segment at a time when all the other competitors, etc., are looking to move to the mid and higher segment category. This also at a time when the rundown in your loan book has been, lower, 11 quarters in a row for the AUM. Can you give us a sense of how long is this rundown likely to continue? What's your outlook here?
Yeah, in fact, I had mentioned last time that we are going to grow from next year onwards, which means that the rundown will get arrested and there'll be growth in book and disbursement as well, number one. Number two, in terms of, if you look at any company, you take the largest bank, the largest HFC, mid-size HFC or the bank, any company, I think they're predominantly into top, three segments. One is super prime, prime, and affordable income-based. So no, you can't say that there is a company which is not into affordable. Every single institution today, they are into affordable. Maybe the mix could be different. So affordable is something, where the growth is very, very high. And every single, whether it is bank or HFC or NBFC are getting into affordable space. And I think it has got a lot of potential to be seen in future. So, which is why all the companies are getting into it. Yeah, with respect to PNB housing, not that we were not doing affordable, we were doing affordable, but the mix was quite low. I think going forward, we want to increase that share because we see a lot of potential in that segment.
In terms of vision, I think you said that you hope to hit the 1 lakh crore loan book mark. I mean, organizationally, Mr. Kosgi, are you having to make any changes, or, I mean, it's at the end of the day a customer-facing business, right? Or is everything on track? As you said, you began by saying just focus on the basics. I mean, so organizationally, it's all set?
See, it's all set. Last time also I had mentioned, I'll just repeat for the benefit of our viewers. So what I had said was, when I said we should focus on basics, I was talking about the profile mix, I think more skewed towards salaried going forward vis-a-vis compared to self-employed. In terms of product, more skewed towards home vis-a-vis compared to non-home. In terms of segments, we'll be more focused on retail, both on prime business and affordable. We would, as of now, we are degrowing a corporate book. After a few quarters, once we bring down NPA to comfortable level, we will restart in a totally different format. I think going forward, corporate, within the overall portfolio would be about less than 10%.
Just quickly before we let you go, Mr. Kosgi, are you acquiring any talent from Canfin Homes into PNB Housing?
See, PNB Housing is a top-class housing finance company in the country. So, as our hiring strategy, we do hire from all the banks, be it large, mid-size, small banks, institutions, which is NBFC and HFC. And if it so happens that we were able to get a couple of them from the company you mentioned, I think we would be open to it.
All right. Thanks a lot for joining in, and all the best. That's PNB Housing Finance. For the market, it is getting a bit worse now. The Nifty is down almost 40 points. Mitesh Thakkar joins in for our special charting trends segment as we look into the new year and tell you what to expect. Mitesh, thanks for joining in yet again. For 2022, the Nifty has had a big outperformance compared to its global peers. Even in dollar terms, the Nifty is down almost about 7-8%, while most global peers are down. The S&P 500 is down about 20%. First, if you could just tell us what's the outlook for 2023 in terms of the key markers on the index itself?
So, Sonia, I think a couple of things. On the monthly chart, the earlier high which we had was in October of 2021. And then we had a high of, on a monthly closing basis, 18,758 for November 22, which is last month. And the indicator reading was much lower. Typically, this means that there is some loss of momentum at higher levels, which when the price makes a new high and the indicator does not. I would believe that the first few months will be more of consolidation and choppiness and correction would come in. Worst case scenario, which I'm penciling in case something very negative happens on the global side, could be around 17,100 to about 16,950 zone. So I think that's the area which I think could be tested somewhere in the first quarter in case the market becomes worse. And I think only, a break above 18,500, 600 would resurrect the long-term charts and give us a target of 20,000 to begin. So initial phase of the year could be slightly on the negative or the choppy and volatile side with consolidation coming in. But with this correction playing out also, I think this is a market which when that bigger dip of around 800 points, 900 points from here could be yet a very good buying opportunity.
Okay, now let's get to individual names, and you have a few charts which you want to present, Mitesh. Let's start with Axis Bank. If you can explain the chart, it'll come up on the screen, and then tell us what do you want viewers to do? Axis Bank.
So one, Prashant, I think Axis Bank, if you look back for about 5 years, kind of a charting time frame on the monthly basis, we saw that the stock had three important lows around the levels of 380, 395, and on the upside had multiple highs around the levels of 800. I think this quarter the stock broke about that with long-term indicators very, very positive. Typically, I think a 5-6-year-old consolidation, when it breaks on the upside, will give you a rally of, on an average, about 40 to 50%, and in some good cases, even more. So I think I'm looking at a target of around 1100, 1150 to begin with, which is 40% higher from the breakout levels of 800, 820 zones. And beyond that, I think the stock can even go to 1300. So for the year of 2023, Axis Bank can be a very good stock to have in your portfolio.
Bajaj Finance has had one of those rare years where it's actually ending the year with a decline. I mean, this year so far it's down about 7.5%. But if you just take a look at the way it's performed over the long term, it's created serious wealth. Do you think this consolidation this year, mild underperformance, is an opportunity?
On the longer term basis, yes, Mangalam. I think Bajaj Finance, has, as you rightly pointed out, has been a big wealth creator. But look at the recent charts. I think, having had multiple years of higher highs and higher lows, for the first time, we saw similar highs being made, which is typically, in technical terms, I would call as some kind of a double top formation, which should, if not give a big correction, at least send the stock out of the uptrend and into a consolidation. So that's the best case scenario, which I'm assuming. On the higher side, on the charts of Bajaj Finance, we saw a monthly closing of around 7,500 in September 21, and then a monthly closing of around 7,350 or thereabouts in September 22. So, there have been two highs, and on multiple occasions, if you look at the monthly candlestick charts, the stock has intra-month gone above 7,500, but not had a closing above that. So, and now the momentum indicators are suggesting some clearly loss of momentum on the uptrend side. So I think this will be a stock which will do a big consolidation between about 5,500, 5,400 on the downside to about 7,500 for many months to come. In that consolidation, yes, buying near the lower end of the range might still be very, very profitable. But next couple of quarters, I expect that the stock will not get into an uptrend.
Okay, well, the other stock that you're looking at is GNFC. Tell us, what does the long-term chart indicate?
This stock again has done very well. Post-COVID, the stock made a low of 85 rupees and then went up to as high as about 850 rupees, which was in April of 21. Now, I think that entire uptrend is coming to an end, and there are signals of more corrections happening over here. My sense is that this stock will clearly, for the next few months, be having more of making movements where it makes lower highs and lower lows, and I am penciling in a target of around 430 to about 400 for the stock. So another 20% correction, despite the fact that the stock is already about 30% off from the highs. I think another 20% could happen here.
All right, so that is GNFC. Another one is Power Finance Corporation, PFC, Amitesh.
Prashant, recently I think I had, you guys had pointed out REC being added to the CLSA portfolio. And I think both REC and PFC on the long-term charts look very, very exciting. After years of, PFC doing a channel kind of a movement between the range of about broadly 140 to about 70, 75 on the downside, the indications are that the stock is ready for breaking above this 140, 145 range. So I'm waiting for that breakout to happen. Once we get a monthly closing above 145 or, a closing or 2 weekly closings above 145, I think the stock should get into a very strong uptrend. That will be an all-time highs for the stock as well. And I would pencil in a target of around 175, 180 as the minimum, but eventually looking at 200 plus kind of levels.
Right, Mitesh, thank you so much for joining in and charting those trends for us. Literally, may the charts be with you, as they say, in 2023 as well. Of course, we will speak with you on a regular basis until the new year, but just from a long-term gazing perspective, thank you so much for joining in and giving us those views. Just to round them up, positive on Axis Bank, it's recorded a multi-year breakout. Positive on Power Finance Corporation as well, though weakness in GNFC, and Bajaj Finance facing some bit of exhaustion at levels around that 7,500 mark. With that, we'll slip into a short break, come back on the other side. We get all the updates from the commodities arena. Manisha joins in. All right, thereafter we'll also discuss retail trends with Lalit Agarwal of V-Mart Retail.
Powered by Canara Bank. Together we can. Co-powered by Signature Global, making India affordable. In association with AMNS India. And tested like Samsonite.
झांके रे झांके झरोके से झांके देख के दम है छोटे बड़े सारे झांके रे झांके फ्यूचर को ये ताके तरक्की को टुक टुक हर कोई ताके झांके रे झांके
Reimagineering brighter futures with smarter steels. ArcelorMittal, Nippon Steel India. Smarter steels, brighter futures.
आग को फैलने से रोकना मुश्किल है पर नामुमकिन नहीं। अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाई क्लब प्राइम आग से बचाए।
Once an investor has assessed their financial goals, timeframes, and risk appetite, the next step is to formulate a sound financial plan. It is important for investors to understand features of the financial products and whether they suit them, their investment philosophy, and risk profile. Smart investors do not base their financial decisions on tips, rumors, hearsay from neighbors, acquaintances, friends, or anyone who has anything to say. They do their own research or take advice from qualified and credible financial advisors. Always remember, it is important to choose the right financial products to meet your specific financial goals.
NSE द्वारा निवेशकों के हित में जारी।
उत्तरवीर कमाल दिखा अपना, कभी टेबल बन जाता है तो कभी अलमारी। वीर MDF आम प्लाईवुड से ज्यादा मजबूत, ज्यादा किफायती, दिखे चकाचक, दिखे टकाटक।
जिंदगी को दें रफ्तार, शुरू करें इसी त्योहार, खुशियों का सफर बिताएं साथ मिलकर। त्योहार तभी हो जब अपने साथ हो। SBI के संग इस त्योहार छोटी किश्त से बड़ी खुशियां ले आए। SBI, the banker to every Indian.
Okay, welcome back to Corporate Radar. Let's shift focus now to the commodity markets. Manisha Gupta is joining in. Manisha, what's the one commodity that you're looking at today?
Well, as we count days to the year end, Sonia, I'm looking at gold prices now and the outlook for 2023. So the gold prices clearly are closing this year slightly in the positive when you look at the dollar terms, and quite good gains when you look at the rupee terms because of the rupee depreciation there. But this is what we've done in this year. We've seen a high of $2,050 per ounce. All-time high has been $2,070. So we weren't too far away from that. The low has been at $1,615 per ounce, and currently we're trading at $1,800. So in middle of somewhere of those high and low levels there. Well, for 2023, the expectation really is, this is about the prices which have declined from highs. This is purely because of the US Fed delivered the quickest rate hike cycle ever. And we did see the strength in US dollar index, and that continued to weigh onto the dollar index there. The markets will, though, continue to watch out for the concerns that are coming in from inflation, recession fears, slowdown, geopolitics. There is just so much that the street will watch out for in 2023. Also, the interplay between the inflation and what the global central banks do is something that the street will keep an eye on as well. This is yet another worry that is keeping the gold prices on the higher side. The COVID variant still evolving, and we are looking at numbers increasing globally. That has been keeping the gold prices higher as well. That's an important indicator. These are as per reports which suggest that in last 7 global recessions that you have seen, gold prices have given you an average return of 20%. So if we are looking at slowdown, weak profit earnings, etc., then gold perhaps is a place to go to and must have in your portfolios as well. This is what most banks and brokerages by now, of course, have come out for their outlook for 2023. The bearish of it all has come in from Metal Focus at $1,650 per ounce. TD Securities in Canada says that $1,575 to $1,800 of a range is what they expect in case of gold prices. So $1,850 to $1,900 is where Fitch, Commerce Bank and Slatestone Wealth expect the gold prices to be within. We have seen this range already in this year as well. And now let's talk about the bullish trends going forward. So this is about higher prices. Citi is expecting gold to go to $1,900 per ounce. IFL talks about $1,950. UBS as well thinks $1,900 is an average that you will see in case of the gold prices. Nirmal Bang expects 2,000 coming back. Saxo Bank expects newer highs at 2,000 to 2,075 on the higher side. And then you have some of those exaggerated, obnoxious, if I can say, those kind of expectations as well going forward from next year. Saxo Bank also expects that if prices break above 2,075, then $3,000 per ounce in case of gold prices also could be coming.
Okay, 3,000.
Yeah, oh, that's Standard Chartered talking about 2550, and Swiss Asia has talked about 4,000 if 2,500 takes away as well.
We had the Swiss Asia gentleman on
You're
air,
keener,
right?
yes, he said this.
Recently, yeah. Thanks very much, Manisha, for that. So that's commodities and gold. All that glitters is gold. All right, HEG is the other one we are going to look at. It's up. I mean, it's up, what, 6%, 7.5% now. So 1,034. Vivek is standing by to tell us more what's happening. Vivek, hi, over to you.
That's right. So, we had highlighted in the morning about, the company's foray into manufacturing graphite anodes for lithium-ion cells. Street is clearly cheering this particular move. Also realize, the prices, the underlying prices too, are on an upswing in the last couple of trading sessions. So that also is aiding the sentiment as far as HEG is concerned. Let's have a look at the news once more. The company, intimated the exchanges that they're going to incorporate a wholly owned subsidiary known as TACC, mainly to manufacture graphite anode for lithium-ion cells. 2,000 crore capex is what the company has planned out in 2 phases. Phase 1 is to cater to 10 to 12 gigawatt hour of manufacturing capacity as far as cells is concerned. Phase 2 is a further 1,000 crores of capex to double capacity to cater to 20 to 22 gigawatt hour of cell manufacturing capacity. On the back of this, the stock, as you mentioned, is doing very well in today's trading session.
Okay, thanks a lot for that. HEG up 8.5% right now. Let's find out what's the latest on Laurus Labs. Ekta's here with more on that. Ekta.
Thanks for that. Well, yes, Laurus Labs has been in focus since last night, in fact, where we did understand that there was a fire. So they have basically come out with an official clarification that there was a fire which occurred in a block of an API manufacturing Unit 3 plant in Visakhapatnam. The operations in the other production blocks are running as per normal. Unfortunately, 2 employees and 2 contract employees lost their lives on reaching hospital. 1 regular employee is undergoing treatment. The company has launched an investigation into the incident and they estimate no material impact on the operations as of now.
Okay, thanks a lot, Ekta, for that. Well, let's do one thing. Let's take a quick break. A very quiet market, absolutely flat. But on the other side, we will find out what's happening with the consumption space. Lalit Agarwal of V-Mart Retail will join in to discuss the demand trends post the festive season. So do stay tuned in for that. We'll also connect with Vyas Chakravarti of Shriram Finance for an outlook on their business going forward. Stay tuned.
आज तबीयत ठीक नहीं लग रही, तुम ही सब काम निपटा दो ना। अरे टेंशन किस बात की? सेंचुरी एमडीएफ का लो एमिशन प्रीमियम प्लस है ना, हायर डेंसिटी है, वाटर रेजिस्टेंट भी है, यानी ये है जहाँ नो टेंशन वहाँ।
लो एमिशन प्रीमियम प्लस बाय सेंचुरी प्रोवुड।
सब ठीक है ना? अपॉर्चुनिटी मिस हो गई, स्टॉक खरीदा था, फंड नहीं है। तो आईसीआईसीआई डायरेक्ट का बाय नाउ पे लेटर ऑप्शन क्यों नहीं ट्राई करते? अपॉर्चुनिटी दिखे तो स्टॉक्स खरीदो, मार्जिन फंडिंग करके बाद में वापस कर देना।
करो तो आईसीआईसीआई डायरेक्ट करो। Investments in securities markets are subject to market risk. Read all the documents carefully before investing.
ठंडी चाय? हमारे पास बादाम है, किशमिश है, काजू है, अखरोट है। तुम्हारे पास क्या है? मेरे पास सलो है, गर्मा गर्म चाय।
सेलो वैक्यूम स्टील की थर्मोसील टेक्नोलॉजी रखे गरम को गरम और ठंडे को ठंडा 24 घंटे।
ये ठंडा भी रखता है? ठंडा लस्सी पिएगा?
सेलो वैक्यूम स्टील फ्लास्क रखे गरम या ठंडा 24 घंटे।
देश का हर अरमान पूरा करे एक नाम, श्री राम श्री राम। बोना उगाना, कारोबार चलाना, हंसाना मनाना, वादे निभाना। कोची, मोहाली, राजौरी, वाराणसी, मुंबई, पन्ना, शिमला, बड़ौदा। श्री राम के साथ आगे बढ़ना।
श्री राम फाइनेंस
फाइनेंस लिमिटेड, आपकी प्रगति का साथी।
Welcome back to CNBC-TV18. For now, it's very, very quiet. The mid-cap index, though, is holding up with gains of 150 points. But let's connect with Shriram Finance for their business momentum, a check on their business momentum. The company, remember, was created out of the merger of Shriram Transport Finance, Shriram City Union Finance, and the ex-holding firm Shriram Capital. Vyas Chakraborty, who's the MD and CEO at Shriram Finance, joins us now to talk more about that. Mr. Chakraborty, thanks a lot for joining in. First, if you can just, start by talking a little bit about the transport finance vertical and how that's shaping up. We have started to see some resumption of the upcycle in the commercial vehicle market. And over there as well, the indication is that this is the start of a multi-year upcycle. Can you tell us what are the trends that you are seeing and what kind of growth can you eke out?
What you said is right, that there is an upcycle in in the CV market. There is a lot of, we are seeing a lot of demand coming in for the used vehicles now in the market. So replacements are happening. So the used vehicle stock is coming into the market, which is our primary product that we fund. We are seeing this across segments. In fact, we are seeing this pickup in demand from a small commercial vehicle to a medium and heavy commercial vehicles. In fact, we are also seeing demand coming up in construction equipment, machinery. So, we are keeping our fingers crossed, hoping that the cycle will, continue.
A lot of people will be keeping their fingers crossed and hoping that the cycle continues. Mr. Chakraborty, now with the merger being done, just wanted to understand the upselling / cross-selling opportunities here. I mean, how many customers do you think will be an overlap between the erstwhile STFC and City Union, Shriram City Union?
See, on the date of merger, we had very little overlap between the two companies in terms of customers. So that's the data that we are mining now and working on it. The past few months, we've been working on identifying where we can actually sell the other companies' products to the customers. So right from 1st of December, that activity is going on in full steam. So we've identified that almost about between 20 to 25% of STFC customers are into some kind of a business where they're using these commercial vehicles for their captive use, and those are the customers that we are targeting for our business loans, and vice versa. The business loan customers in SCAF, that is Shriram City, are running commercial vehicles. So that is another. Those are the people that we are targeting for selling commercial vehicles.
Just to come back to that point, Mr. Chakraborty, which you first made, good demand for commercial vehicles, etc. We spoke with Sundaram Finance just a couple of days back, the management just a couple of days back, and they said that there are two things. One is that diesel prices remain quite high, right? I mean, international oil prices are off, but diesel prices remain where they are. There's not been very much correction. And second is the cost of a commercial vehicle now is 40-50 lakhs, at nothing less than that. So the cost itself raises for many, at least individual customers, viability issues. I mean, even if you go in for one vehicle or two, the cost is 1 crore plus, and because of these two reasons, the commentary was a bit more muted. Would you agree with these points, and what are you seeing?
See, on a new vehicles, I completely agree with the viewpoint. Today, the costs of for an individual truck owner to go and buy a new truck is becoming very expensive proposition. and becoming difficult for them to break even. So they are actually, what's happening today is our existing customers also are moving towards they're replacing it with a probably slightly newer vehicle, which is used, in the sense a guy who's now running a 7-8-year-old vehicle is moving into a 3-4-year-old vehicle. They are not going for a new vehicle replacement, buying a new vehicle. So the demand for used vehicles is quite robust. The cost of the new heavy vehicles at 40-50 lakhs, today it's probably is being only met or being bought by the fleet operators.
Right. And
who have the ability to pass on the cost of fuel, the increased cost of the vehicle and the fuel, who have rate contracts.
So can you tell us what is overall, I mean, you spoke about how you're seeing an improvement in terms of both demand. There is construction demand coming back. The CV cycle is looking good. Replacement demand is back. What would you be targeting as AUM growth, not just for FY23, but what are you looking at in FY24 as well?
See, the overall we are looking at, for the company, SFL as a company, we are looking at about a minimum growth of about 15% on the AUM.
15% AUM growth for FY23?
Yes.
Okay.
Sorry, 23-24, yeah.
For 24, okay. That's 15% AUM growth. All right. And what about the credit costs?
See, credit costs will be in the range of about around 2.4, 2.5%.
All right. Take that point. Thanks a lot for joining in, Mr. Chakrabarti, and giving us all the details. We wish you good luck with the merger and the cross-selling opportunities that you are targeting as well. You said that you are mining that data. Let's hope we get some more clarity on that as a result of it as well, and the conversions, etc. We'll talk about that in our future conversations. With that, let's move on and talk about the retail space now. Channel checks by brokerages suggest that there has been a sharp drop in discretionary consumption post the festive season. Lalit Agarwal, who's the founder and MD at V-Mart Retail, now joins in. Lalit, how has the third quarter been? If you could, break that into two halves. Festive season, I presume, would have been extremely good with the weddings kicked in as well. But then thereafter, was there a slump? Was that noticeable? What are your thoughts?
Good morning. It has been a little difficult year and difficult quarter as well. Initially, definitely festival started with a good bang, but still we did not see a huge response in festival. For North India retail, I think winter has played a very good. Winter played very well, and post the festival, for us, winter did well, and we saw a lot of footfall walking in because of both winter season as well as marriage season. So that came in. And once again, in the December month, we are seeing a little lull, and then people are once again, the winter was not there for the last 15 days. And then now, once again, in this week, we are seeing winter coming back. So it is once again coming back. So largely it is driven by seasonality or festival or the need in the family, which is wedding. So need-based shopping is happening. But other than that, the aspirational levels are not getting met because there is a stress in the customer's pocket. So we are seeing a little dull from that perspective if we compare it from the pre-COVID levels.
Agarwal, good morning. Would you say the majority of this muted kind of picture that you're painting for us is more structural and not seasonal, which is, as you said, high sticky inflation, hurting consumer wallets, people deferring discretionary purchases apart from what is essential? Would you say majority is, sort of economy inflation related, so that in that sense more structural?
Yeah, you're absolutely right. And this is what we have been talking about and I have been talking about. So this whole inflationary pressure which came in and which is coming only for that mass and that mass consumer who lives in primarily rural as well as semi-urban India. And they who earn between 20,000 to 30,000 rupees, for them, large part of their basket used to be that core fundamental raw material of that food-related inflation, vegetable, rice, oil, wheat. So all of that has really impacted him. So most of that inflation is still there. If we compare it from the 1920 level, it is still there, and it is creeped in almost 25% extra budget has gone into that particular consumption. So there is a pressure on that particular consumer segment, and that pressure he is not able to, what we call this whole luxury or the need based. Actually, whatever is the need based is getting consumed, but whatever is aspirational based, for that today they are not able to meet up with their demands.
Okay. Can you help us with some numbers? What is the sales per square feet that you've seen, say, by the end of FY23? Where will you be? And what are you targeting in FY24? Just to get a sense of which way things are headed.
We normally target around 700 to 750 rupees per square feet per month. And that's what our targets are. And we are somewhere close to 700, but still not there. So we have versus the targets, we have a little dull, and that's what we have. But yeah, in FY24, I mean, still this inflationary pressure continues for first quarter. But yeah, largely we believe that by the second quarter, we should be able to get back to the normalcy period, and we should be able to see a little lesser inflation then. And we will see a good sales coming back. We should target at least 800 rupees per square feet in the FY24 year.
So in FY24, you're targeting 800 rupees per square feet per month, right?
Yeah, that's for the V-Mart business, but for the unlimited business, it is still lower. They are playing right now 100 rupees lesser than the V-Mart business.
You know what you're saying is kind of concerning for everyone who's been looking at your business. That's primarily because if people aren't buying aspirational products, they're not high margin products. Need-based products have normalized margins. This at a time when your margins have dipped from about 15% in the first quarter to 11% in the second quarter. So I wanted your thoughts on margins, one. And secondly, also the kind of customers that are not buying a lot more are also the kind of customers that you were targeting to sell online. I mean, online was just about 10% of your business. You intended to take it to about 20% of your business with LimeRoad's acquisition, etc. as well. So how are those two verticals panning out for you? One on the margin front, and secondly, online?
See, I mean, both the areas, margin, if I just tell you, definitely there is a pressure on the margin. But this pressure is just not because of quarter one and quarter two. I think largely we have always seen in our trend, in our margin trend, always quarter one is always a good quarter. Quarter two normally is a bad quarter for us in terms of margin, because that's not a fresh season or a fresh festival season margins. So normally it is a trend. As a trend, if I see year on year, we are hovering rightly. But margin, I think is a pressure point. If we don't have the like-to-like growth or like-for-like growth, and if we don't see quantitative consumption growing, there is a pressure which will build up, because the cost is definitely rising, both from the commodity perspective as well as the expense perspective. So there is a pressure which will be there in the margin for the entire year. And as far as online sales are concerned, I think we are seeing traction there, both from the vmartretail.com as well as the LimeRoad that we have acquired and the marketplaces that we are doing. So we are increasing our share there. But definitely there are a lot of plans for the LimeRoad which is going to come in. We will need some more time for that business to get stabilized and get galloping.
Sure. So you're saying that there is a discretionary purchases are suffering. It's been a lull in December so far, and there is pressure on margins. Would that lead to you slowing down in your store additions? Because so far I think you have about 405 stores in total. What are the store openings that you're looking at, and would you go easy because of the situation at hand?
So I think these are store openings are not short-term decisions. I see this inflationary pressure as a short-term problem which is there in our demography, and this doesn't continue. So store opening is a long-term decision, and we believe that there is a great opportunity for India and the tier 2, tier 3 towns. So there is a large opportunity, and we are definitely putting our plans of expansion as it was, and we are actually exceeding those. So we already reached almost 411 stores now, and we will be opening more stores even in this particular year and the next year also.
Quickly before we let you go, what are your targets for this year in terms of same-store sales growth and the next year?
So I may not be able to tell you right now, but yeah, same-store sales growth looks a little difficult in this particular year. But in the next year, definitely, same-store sales growth, I'm just comparing it from the 2019 pre-COVID level. But if I look at from the 21-22 levels, it will definitely be positive. It will be, I can't tell you the number right now, but yeah, we will see some good number coming in.
All right. Thanks a lot for that, Mr. Agarwal. All the best. And you have been sounding a bit of caution, or at least have a cautionary tone in your voice. Let's see. Hopefully, things should improve when we speak next. With that, it's curtains down on this edition of Bazaar. The mid-cap index is firing now, up about 228 odd points. So once again, volatility getting back into the system. It's not new to us. But for now, the bulls have it and are having the upper hand.
All right. We'll wrap up on this edition of Bazaar. We'll take your leave. Thank you very much for watching. The market back in the green. More coming up on the other side.